Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the market trends, the sectors that will be in focus, and also the stocks to watch out for in today's session. We'll also be addressing all your stock-related queries with our experts on the show. So keep commenting on our live feed, and we will have them addressed by our expert on the show. But before we move any further, let's take a look at what the headlines are looking like this morning. Broad-based sell-off on Wall Street last night. Dow drops over 2% on fears of higher interest rates for longer. Watch out for Fed minutes that will be released later tonight. In fact, European markets too shut shop in the negative territory. Asian markets open lower following a weak handover from Wall Street. The SGX Nifty too signals a lower open for the Indian market. NSE extends trading hours in interest rate derivatives to 5 p.m. from 3:30 p.m. following the RBI's February 8th circular, extending trading hours for various markets. The changes will come into effect from tomorrow. Also on the show, we get you top bets from Siddarth Bhamre of Religare and also discuss stocks like LIC Housing Finance and Zensar Tech. Well, we're now joined by Hemen Kapadia of KRChoksey Securities. Good morning, Hemen. Good to have you on the show. Well, we've been stuck in that 17,800, 17,900 range. In fact, SGX Nifty is once again giving out negative signals. We are poised for an open below that 17,800 mark. What are the kind of levels you'll be watching out for today?
A very good morning to you, Nandita. Thank you for having me on the show. I think few things. The dollar index has posted a short, possibly a medium-term bottom. Crude doesn't look particularly bad, and gold long-term charts look positive. So, frankly speaking, all of these three asset classes would be anti-equity in the sense if they're doing well, equities shouldn't. So, and sounding slightly contradictory, you have the France and German markets almost at highs. So, frankly speaking, it's all over the place. Okay, we have a monthly expiry that just complicates things at our end. We saw sell-off in the Bank Nifty. Last Friday, the Bank Nifty UI went up by almost 8.25%. It was obviously a short. That's why we've seen the Bank Nifty pull off like it has. We haven't been able to sustain. Frankly speaking, we overcame 17,948 last week. We should have gone to 18,250. That didn't happen. There is weakness in the sense many of our stocks, you have like an ICICI Bank, you have maybe like a Sun Pharma, or even a State Bank. Okay, month is not yet over. We still have a few trading sessions left. So some of these stocks, Nandita, the long-term charts, monthly charts, the mechanical indicator like the MACD are signaling a sell. Okay, once again, month is not yet over. We need to review this at the end of the month. But frankly speaking, markets look jittery. And like I told you, with crude not looking bad and dollar index turning, what we're seeing is a near-term reaction. But if we don't recover and close up by 18,250 in the next couple of weeks, I think we could be in for further trouble. Nandita.
Right, so setup is not looking all that encouraging. Hemen, I want to get in your thoughts on Zensar Tech. This stock is up 30% over the last 1 month. In fact, yesterday it was up somewhere around 7% or so. Nippon Life India trustee has picked up additional 1.75% stake in the counter. Mid-cap IT stocks have had a great run this year. In fact, last year we saw underperformance coming in on the Nifty IT index, but the index has reversed course when it comes to this year, right? So how would you advise investors to play Zensar Tech now?
Very valid point, Nandita. Some of the mid-cap IT stocks have done well. We've been riding piggyback on the NASDAQ. Zensar has been a late bloomer, so to speak. I think the quarter numbers were good. I think so. There seems to have been a re-rating after that. We formed a rounding bottom on the weekly charts, Nandita. That's a bullish formation. So yes, things are looking good. But the way I see it, Zensar stands out as a sign of strength. But most of the stocks, I believe, are in a bounce, a recovery, not a rally, whether it's Infosys, TCS, or even the IT index as a whole. But yes, standalone, a rounding bottom, we are about 288, we are heading towards 330. So Zensar looks good in the IT universe. How long it's going to continue to do that, I don't know, but it's moved late, still looks good.
Hemen, just want to get in your thoughts on IEX. All these power companies were on a tear yesterday. We have a query coming in from Pawandeep Singh, and he wants to know whether the up move will continue in IEX today as well.
Well, that's $1 million question. Ever since we've seen as a X bonus, IEX has sort of lost a lot of momentum, maybe because we had a run up. That is just this thing. We have supported 136. Once again, the stock seems to be looking positive. So, yeah, succinctly put, yes, I think IEX should do better from here. In terms of levels, we need a weekly close above 151. I think that would open the doors for a further upside. So it looks promising. It's not delivered up till now, but once again, it's looking good.
Right, it's looking good on the charts. Hold that thought, Hemen. We'll come back to you, but let me also introduce on the show Siddarth Bhamre of Religare Broking joining us this morning. Good morning, Siddarth. Good to have you on the show as always. Before we move on to the markets, I want to get in your thoughts on the extension in the trading timing for interest rate derivatives that NSE has announced. Now, we know that this will benefit retail traders as they will get, they will be able to react quickly to all the global updates after the market hours, right? But how would this move, what would this move mean for brokerages?
Well, not much, Narita. Firstly, thanks for inviting me on your show. So interest rate means we are talking about timings related to banks, and banks anyway function till till evening. So this is just bringing it in line with the banking space. And of course, interest rates derivatives, they don't have much of volume from a retail perspective. Our market is not yet too matured over there. So interest rate derivatives and equity are two different things, and I think it won't impact retail in big way.
Right. Let's now talk about the markets then, Sid. Markets, as we all know, have been stuck in that 17,800 to 18,000 range ever since the budget on 1st Feb. Now we have the FNO expiry tomorrow, and there's been a lot of volatility. In fact, markets may slip, in fact, even below that 17,800 this mark this morning. So how would you advise investors to play the markets at this juncture? What should the strategy be? Buy on dips?
See, Narita, firstly, be it investors, traders, this market is stuck in a range. Investor who has a time horizon of 1 to 3 years, this market has not gone anywhere since last 1 to 3 years. Within trading community also, you can have positional traders who have, 1 month, 2 months view. Since last 1 month, market is in a range where, the 17,500, 600 is support and 18,200, 300 is resistance. And from very short-term perspective, also market is in a range. And in a range-bound market, either you make some index derivative strategies where it benefits you when market remains in range, or you be stock-specific. As far as I think investors and viewers would be more interested to know that when this range will break and which direction it would break. See, at this point of time, the positive triggers for these markets are very less. Either we look for global cues, either we look for falling commodity prices or falling interest rates, or we look for earnings for this market to get a direction. Now, globally, nothing much is happening. In fact, they were outperforming. And why they were outperforming? Because before that, we outperformed substantially when they were suffering. So there is some catch-up role which is happening. Now, even that catch-up, we are seeing that Dow is showing signs of weakness. So overall, the positive triggers are not that great. Even if you look at earnings, it was not a great season as such. Yes, there was some disappointment. Some names were like in line with expectations, but there was no major positive surprises barring 1 or 2 spaces. So earning support is also not there, and that's the reason you need something to happen. FI's liquidity point of view, even they are positionally short on this market. So one thing is very clear that upside is limited and downside, maybe it's there. We're not very sure about it. So in this kind of market, you have to be stock specific and sector specific. And that is what the strategy we are adopting.
Well, need to be stock specific in this market. Now, last time when I spoke to you during Diwali, I remember you had picked up HCL Tech as one of your picks. And this year, we've seen IT index make a strong comeback. In fact, if you look at shares like Tech Mahindra, they've given double-digit returns so far this year. Would you retain your view on IT? Do you think this rally will continue through the year?
Well, I don't know through the year because, situations are changing very fast, Nandita. All depends on, how US will pan out and how Fed would react to it. Because if the interest rates in US goes up substantially, then I think everything over there would suffer because already interest rates over there are at historical highs. And why I'm talking about US market? Because IT is 80%, 75% of businesses come from that space. So far, IT stocks have been doing well. What we had envisaged that IT stocks, when they were correcting because there were problems in US, and also the manpower cost was going through the roof, which was impacting their margins. We had anticipated that the problem in US was not just from a very long-term perspective, and people were spending on IT to do cost optimization. So IT business was flowing, and this manpower cost thing is not going to remain forever. It was a cycle which lasted for 1 year, and now we are seeing that how manpower cost is coming down, attrition levels are coming down in IT, and this would give some fade to investors, and they would start coming back into IT. Now that theme is playing out. It has not completely played out. It's playing out. So we might see that outperformance in IT might continue, and we have Infosys, HCL Tech as our preferred picks over there in large cap space.
Well, Infosys and HCL Tech preferred picks in the IT basket. Siddarth, is the rally in banks as good as over? Because that pocket has been under severe pressure since the last few weeks. Would you expect more pressure to come in when it comes to this sector?
See, banking is not doing good. I think this is clear to all. It may continue to remain under pressure or maybe, just consolidate. But then I don't have very clear-cut opinion, to be very honest, Nadira, that how long banking would continue to underperform. But because of underperformance of banking, there are some very prominent trades which are emerging, and I would like to dwell more into it. We all know that banking and finance constitute around 40% of index, and people are generally overweight because of the growth they show. And now with this 40 to 45% of your funds AUM underperforming, what fund managers are doing, Nandita, is that they are shifting the weightages. And even if you shift, 2-3% of weightages, you will have to, go into other space. Now, which are the other big spaces? I don't think so. People are very upbeat on metals, and even if you talk about metals, then there are hardly few names. Telecom, you have 1 or 2 stocks. Even those names are not doing that great. At least one name is not doing that great. The other name is doing well. Then infrastructure, you have L&T among a large cap space. That is where the allocation is happening. And then you see that stock is outperforming. Within infrastructure space, what we are liking is cement. See, why I am talking about cement when you ask me a question about banking is because banking is underperforming. And the funds would get diverted to other sector. Ultimately, people who want to make money can make money out of any space. And the disadvantage of banking is going to work in favor of some of the sectors. So in cement space, that, a couple of big names are under fire because of their recent acquisition, or if I have to be very direct, ACC Ambuja people may not touch immediately because of what's happening. Then the only large cap name left for you is Ultratech Cement. You need to have exposure over there because cement, not just from the disadvantage of banking, but overall cement space is growing, capacity expansion is happening, the input cost pressures are coming down. We are going to revise our target price in Ultratech upwards. So that is one space. The other space is auto. Not all auto space are doing well. Nandita, last time also we mentioned that Maruti is our preferred name because last 5 years this stock has underperformed because there was no series of launch of products. And now see how many products Maruti is launching. Even if its market share, which came down from 52 to 43%, goes to 47, 48%, I think we are going to see a substantial return generated in stock of Maruti. So these are few ideas which we feel will get more focus by investors because banking is not doing well. And within banking space, I think people have overreacted to what has happened to SBI. because of some exposure towards an Adani Group. That exposure on the overall balance sheet of bank is not very substantial, and market has overreacted. We are still in the nascent stages of capacity expansion and credit offtake growth, which will benefit to stock like SBI. So dips in SBI is one stock where we are suggesting to buy on dips in banking space.
So SBI, we spoke about autos, we spoke about the cement basket. Any other pocket that investors should be chasing in this kind of a market, Sid?
See, firstly, this is not a market where you have to chase because you're not in a momentum market. And when you're in a momentum market, that is where, we should not wait for dips. We should chase stocks. There will be a dip. All these names which I spoke about, even these names will show you dip. And they did show a dip because we are not in a momentum market. The other space which I feel will benefit because the way the announcements have happened in budget, the focus on rural economy is FMCG space. Mind you, valuations are not very attractive, but then when market or any stock has traded for a long time on a fair value at a fair value zone, ITC is something which we're liking. We're liking Britannia. We're also liking some other names like HUL and Godrej Consumer. But ITC and Britannia would be favored names in FMCG basket as such.
Right, Sid, with that, we are running out of time. So thanks a lot for taking out time and joining us this morning. It was a pleasure chatting with you.
Thank you. Thank you, Nandita. Thank you for inviting me.
Thank you. Well, with that, let's get back to Hemen now. We're getting a lot of queries this morning. Hemen, let's get in a query on Heritage Foods. This one comes in from Prabhu, and he wants to know your long-term thoughts on this stock. It was pretty flat in yesterday's session, and over the last 5 days, it has lost somewhere around 3% or so. Would you advise a buying on dip strategy on this one?
We remain in a corrective phase. The technical setup, frankly speaking, Nandita, doesn't inspire too much of confidence. If we close below 130 on the weekly charts, I think there could be further pressure. So I'd say time being, stay away. We're on the verge of being a downward bar reversal on the monthly chart. Not looking very conducive for buying at the moment.
Not looking very convincing for buying at the moment. Let's also get in a query on Adani Total Gas. Ishu Singh has written in, and she wants to know your thoughts on this one. Adani Group stocks have been under pressure, of course, as we know, amid news flow. But what are the kind of levels you'd be watching out for on Adani Total Gas today?
Well, it's Nandita, I think some 22 circuits in a row. So I believe at this point in time, levels are slightly irrelevant. Nevertheless, the next support level is hitting lower circuits every day. The next support level, Nandita, comes in at 877. Below that, the next support level comes in at 665.
Right, so those are the levels to watch out for on Adani Total Gas. Hope that answers your query. The next one is coming in from Chitra Nirmal Kumar, and she wants to know your thoughts on DMart. Now, the stock is off literally 900 points from its in fact 900 rupees from its 52-week high of 4,600 or thereabouts. Over the last 1 month, it is up just about 2.5% or thereabouts. What would you advise investors to do with a stock like DMart now?
If it's a long-term view, I think that's a clear hold. If it's a medium-term view, like you yourself mentioned, 4,600, we've been range-bound between 3,200 on the downside, 4,600 on the upside for almost 8 months, and we're going nowhere. There is a slight negative overhang on technical parameters. But if 3,200 doesn't break, I guess we meander here without any decisive trending moves. Yeah, if things have to improve, 3,881 and 4,600 need to get taken out, and I don't think that's happening in a hurry. So long-term you hold, medium-term you should have a sell on bounce.
Right, long-term view is hold when it comes to DMart. The next query is coming in from Ashwin Kose, and he wants to know your thoughts on Tata Steel. Now, the stock was under pressure, but over the last 5 days, it has seen some bit of buying interest, and even in yesterday's session, it was among the top gainers on the Nifty. Would you advise anybody to go and buy into a Tata Steel now after the kind of earnings that we've seen? They were pretty downbeat.
Nandita, we've seen a 5-week decline. So what you're seeing is just a recovery. It's a pullback. It's not a very bullish move. Yes, we came off from 124 to 108.25. Now we're seeing a bounce which could go up to 117, and beyond that looks dicey. And like I said, the dollar index seems to be turning, and if that's going to happen, most of the metal stocks are going to come under pressure. So no, I'm not too convinced about Tata Steel at the moment. No.
Hemen, we also have a query on Hindalco and Jindal Steel. So would you have the same view about the other stocks as well in the metal basket?
Absolutely, Nandita. Jindal Steel and Power is the strongest of the lot, followed by JSW Steel. Coming back to what you said about Hindalco, yes, if the dollar index per se is turned, I think everything gets hit. Yeah, okay. Hindalco has maybe copper, so that would behave a little bit more differently. But support at 427, we could see a small bounce back from here. Once again, if we've come up from 504 to 425 in a matter of 4 weeks, Nandita, a 30-point bounce cannot be ruled out, but that doesn't change the picture. Yes, coming back to the main question, yes, I would be cautious about most of the metal stocks, Hindalco included.
Well, Suryakant Mohapatra had written in with that query. Hope that answers your question. The next query is coming in from Trilok, and he wants to know your thoughts on VRL Logistics. Now, this stock has rallied nearly 12% in the last 5 sessions. How does it look on the charts going forward, Hemen?
Oh, it looks a bit promising. Well, in a wobbly market, it looks a bit promising. But I think on slightly similar logic applies, Nandita. 720, 480, 7.5 months, bounce coming in, bounce could get more acute. What I mean to say is, close above 575 should open the doors probably till 640. But once again, looking at the picture, it's a short to medium term which looks positive. The long term still seems to say that we've had a phenomenal move from 140 to 720, and we're not going to make significant upside above the high, at least for the next few months.
Right. I want to squeeze in 2 queries very quickly. Sandeepan Shah has written in, and he wants to know your thoughts on BPCL. He holds it at a rate of 333 rupees or so, and he wants to know whether it's time to average. What would you advise him to do?
Firstly, it's a government company, so sometimes issues in terms of price and control do sort of change the picture a bit. Having said that, not particularly looking very convincing. Yes, if it closes about 360, I think then we break out of a 7-month range between 290 and 360. Then that opens the doors for an upside. So if you want to take a contra play, yes. And if you're going to do that, please keep a stop loss at 310.
Right, and the last query, Gaurav Chatterjee has written in, and he wants to know your thoughts on LIC Housing Finance. Now, these shares have been under pressure in the last week or so. What would you advise me on this counter, LIC Housing Finance?
There is a distinct negative view on the stock, Nandita. I mean, okay, like you said, markets have been range bound, gone nowhere. Same thing happening with LIC Housing Finance. 350, 430. And we've been in this range for 12, 13 weeks now, going nowhere. Normally, if it comes to a support level of 350, doesn't break, we'd see a 30, 40 point bounce back, then starts coming down. And then if it breaks 350, further weakness. So I'd go with the premise, not looking good in a range, could come to 350 and bounce, but it's not looking pretty.
Not looking pretty on the charts. This wraps up our query segment for today. But before I let you go, Hemen, what would you be recommending our viewers to keep on their list for today?
Okay, monthly expiry, we still have 2 trading sessions left, Nandita. And it's been haywire. But yeah, couple of stocks which stand out a bit. Firstly, it's Alchem. We're in a medium-term uptrend. It's a conditional buy, keeping in mind that Dow Jones has fallen off a cliff and we'll be opening a gap down as far as the SGX is concerned. So once again, Alchem conditional buy at 3200, stop loss 3150, target 3350. It's a positional call, not an intraday call. Secondly, once again, a positional call on GNFC. Stock is oversold, has formed a short-term bottom, is in the process of forming a medium-term bottom. One can buy GNFC once again conditional at 540, stop loss 520 and target 518.
All right, Hemen. Well, with that, I think we've come to the end of the show. So thanks a lot for taking out time and joining us this morning. Well, with that, it's a wrap on this edition of Morning Trade. But coming up next is opening bell, so don't go anywhere.